Good morning. It's Tuesday, September 24th, about 6 a.m. Central Time. Overnight, the precious metals are broadly higher after yesterday's base and industrial metal specific softening due to weakening PMI data in Europe. We'll want to note in our calendars for the next European data release is October 24th. So what I do is I literally write it into a calendar. I've got a Hightower commodity calendar, great tool here, and I'll write down what happened to the precious metals, what the data release, what the number was, and things like that. And then a personal reaction. How was I positioned there? What I could have done better? What did I do? What did I do wrong? This calendar has a ton of useful charts and data on all the different commodities. Comes out once a year, so I know they're selling the 2025, and I'll pick that one up. And then also I have the Stock Traders Almanac that I keep on the desk that gives you a lot of different things to break down. If anything, gives you a great inspiring quote that's pertaining to the financial markets every day. So getting into the overnight price action, gold, new all-time highs, 2664.60. Now, looking at the silver market, up about 0.5% right now. It's up 15 cents, 31.23. I think silver is the best one that has a possibility to run here today. Now, looking at the copper market, up 10 cents. That's a 2.43% move. We're at 445. The low is 434 and the high is 446. Remember, I tell you that in order for silver to really have a big breakout to the upside, you want to see copper behind it because of the fact that most of the mining specifically for copper, that's where they get that silver, and oftentimes it's an indicator of demand going forward. Now, looking at the January platinum, up $10 at $9.82. Palladium up $18 as well. So we want to look at some standouts here because this is a thing in the morning that really gives me the clue. The first thing I do is I load up, I have all the different commodities up, things like that. And I'll look and see what are some of the outliers. We got crude oil up $1.44. We got the Australian dollar up here just a bit. And we also have soybeans up about 4 cents. Now, the thing is that why would those commodities also specifically be up as well and outperforming? Well, at 8 p.m. Central Time last night, China announced they'll cut the amount of cash banks are required to have on hand. This is known as the reserve ratio. So what does that mean here? Is that these banks, they basically are required by the government to hold a certain threshold of cash. How they do that is they make their people, their citizens, when they open up bank accounts, they have to maintain a certain amount of money as well. So say that number, and I'm just making this up in my head, is 10,000 US dollars. You want to have an account, a bank account, China, you need $10,000. Well, what happens if they lower that reserve ratio down to, say, $5,000? So now you're grandfathered into that specific reserve ratio requirement. What people will do is they don't want to go out and just spend that $5,000 on certain things. What they'll do is they'll take the $5,000 out, and they need to preserve that. They need to preserve and protect their capital. So they stick it into their stock market, or they stick it into precious metals and bullion and things like that. So that's why gold futures most likely hit an all-time high. And because of that uptick in now the Chinese economy, because of the lowering of that reserve ratio, you start to see their number one trading partner, which is Australia. We see that currency rise just a bit. We see soybeans, which is a big commodity that's exported to China as well. That poking up just about 0.5% today. I believe that soybeans would be a lot higher if the U.S. wasn't about to do an EV vehicle tariff on China that's supposed to go into effect September 27th because they could retaliate, and the best way they do it is on our agricultural markets. So looking at their stock market, the CSI 300, it's up about 4% overnight. This is the equivalent of the S&P 500 in China. It's bouncing off its support and potentially making a double bottom. Now looking at some other commodities here, because people always wonder what's on my radar. The NASDAQ did go from neutral to bullish trend. The micro S&P went from neutral to bullish trend. We also see the Japanese yen break down just a little bit. If they go back into the equities, they're probably going to put that carry trade back on, and that's where you get the weakening Japanese yen. And then finally, soybeans went from neutral to bullish. Now looking at the CME's Fed Watch tool, because these are all the things that you unpack in the morning. So you have to have a step-by-step process, and it becomes repeatable, and then you can make your decisions consistently on a basis for when it comes to trading, and it takes the emotions out of it. So the CME Fed Watch tool, we're looking at about a 50-50 chance of a 50 basis point cut at the November 7th meeting. You write that, you circle that down in your calendar. You go to the Commitment of Traders report. Now, this is something that I keep getting a lot of questions about. who's shorting these metals? Why is silver unable to break out to the upside for the moment? Why was gold hanging in at a specific level for such a duration of time, finding comfort at the 2600, silver finding comfort at the $31 level for such a good time? Because of the fact that if you go to the commitment of traders that the CME puts out, you click literally select the product, go to metals, go over to gold, and you can see that, hey, the short sellers from September 17th, those are all the producers. Makes complete sense. If you're a silver miner or you're a gold producer and we are at record highs, or you're significantly profitable, just like a farmer forward selling his crop, you're going to do the same thing, especially in an uncertain time with geopolitics, the election, things like that. People become jittery. Now you look at who the other big short seller is, it's the swap dealers, because of the fact that they have different contract obligations back and forth. So they're going to want to be forward selling some of these things. Now getting into the data today, we did have a lot of Fed speakers come out yesterday. They all reaffirmed about a 50 basis point interest rate cut at the next meeting. We'll want to note that. What I generally do is I print off the tidbit about what they said and I highlight it and I look for changes in their verbiage from meeting to meeting. So today we're going to have FOMC member Michelle Bowman. She'll speak. We'll also have consumer confidence. It's expected at 103.9, which would be an uptick from 103.3. We'll see what happens there, and also the Richmond Manufacturing Index. We'll want to note, is that an important data point to some of these metals here? So I'll look back at what happened previously on that release and see if there was any large fluctuations, but I highly doubt it here. So getting into the chart patterns here, definitely a breakout to the upside in copper. And something that I could tell you is that if you've been watching the Metals Minute for any length of time, we actually transitioned from bearish copper recently because of the fact that China looks so dire into a neutral and then a bullish, and then you go long, and then now you look to add on certain things like dips and things like that. You'll want to have a line in the sand, which an easy line in the sand right now in the copper market, 200-day moving average, 50-day moving average, trend reversal point just below that 420 level. So that's kind of your stop out point there. You'll come up with a 25-cent stop from where we're at, and then you'll position size accordingly with using either the micros, the larger contracts, whatever suits your particular risk profile. Now getting into the gold market, gold, little disappointed that we haven't had any kind of meaningful correction, hasn't really given people the opportunity to get in. I hate these kind of markets where they kind of go and go and go. It kind of gives me that same feeling, which keep your feelings at the door, of natural gas that went onto a complete slide. And when I saw natural gas was people going, natural gas, it can't get any lower. So they buy it, and the problem is the slow grind erodes their account and kills them over time. It's not like getting hit in the head by a 2x4 by a massive sell-off and you go, oh crap, I got to get out of this market. It's the grind that kills people. So I will see people come in that possibly miss this rally in the gold market, start to short things like that, and then they end up getting stuck in the position for a long period of time. So oftentimes, like a football game, a basketball game, you call timeout, you reassess, you give it 24 hours, give it the weekend and really think, or move on to a completely different market. Now looking at the silver market, I think that silver has the best setup here for some kind of rally today. Up 11 cents, 31.19 trading last year. Your line in the sand has got to be 30.03. So on a mini contract, you're going to call that about $1,800 worth of risk. That might be too much risk for some people. But again, look at your personal situation here. You could do things like below yesterday's low as a stop loss point on the downside, or you could sit there and look to buy a breakout if it's going to extend to the upside. The stochastics are in overbought territory. Doesn't mean it's overbought, just means that it's got a bullish confirmation. The average true range, 90 cents right now, so you'll want to note that. The MACD is positive, so some of the system traders that use that as a trigger, they will be in that market as well. Nothing really with DMI plus or minus in the reality is the ADX is going sideways to lower, which shows you that the strength of this consolidation is running out of steam at the moment. So that was a lot to unpack on a video, but I thought I'd give it to you. Something else I got to note is that Thursday, Friday, I got this storm. It's like we're literally right out the window. So it's supposed to be heading, hopefully it goes east to me, but hope's not a strategy as well. So, you know, I might not be able to do a video on Thursday or Friday. It is what it is. I'll try and do one, but we'll see how it goes and things like that. But you got any questions, give me a call. 312-858-7303. Remember, futures option trading does involve risk loss. May not be suitable to all investors. Good luck, good trading.